to talk to you about eyes. Quick recap. They got their FDA approval for this August 2S, and in this article, they talked about a planned business combination with Pixium Vision, and also they have a 6-subject early feasibility study, so there could be a press release about that in the future of Orion, which is used to help solve blindness. Another thing I want to show you is this article, and I didn't look at it too carefully recently, but I remember reading it before. Basically, they said that Second Sight is a visual prosthesis vendor for whom Greenberg served as chairman and CEO until 2015. Greenberg, it says one of Neuralink's technology partners is the Alfred Mann Foundation, and the chairman, Robert Greenberg, was in attendance. I'm just trying to tell you that, like, there is actually some connection with Neuralink and Second Sight. And it's not only the fact that they're in the same industry, which is like, I guess it's like human augmentation industry. Okay, moving on to technicals. Technicals which are really important, really important. I ended up having a crappy entry. I actually bought this stock on March 12th, and then I ended up having to ride the wave down because I was like locked in. I didn't have a good broker, so some like really bad situation. So, but it was a lesson to be learned. So in hindsight, I want to buy near low of the day. Preferably, I need to be bullish on a stock, right? Bullish on a stock. So this stock was already up quite high, and then what I'd like to do in the future is just draw a trend line. And like here was a really good time to be bullish. Not over here, but especially over here. Like at this level in particular, where it broke out. I mean, there wasn't much of a breakout here, but, and that's, I mean, like, I'm gonna talk to you something similar about this in the future. It's gonna be really nice, really useful. Oh yeah. Okay, so I had a bad entry over there, and in hindsight, I'm gonna tell myself, try to enter near low of the day. Try. For example, if I had saw this at the beginning of the day, I would have tried to enter near these prices. If I saw it pop up like this, I would have tried to enter near these prices, because the sooner you get in, the safer it is. In terms of a high, like this is actually a scale between smart traders and stupid traders, and that day I was a stupid trader. This is the stupid traders going long, and these are the smart traders going long, or like whatever. Anyways, I'm babbling. Yeah, so what ended up happening was same pattern as the day before. Well, the same trade in the trading day before. Low volume, pennant, and then boom, breakout. Same thing the day before. So I mean, it's the day after. So pennant, low volume, breakout. And like, you know, it's a really good breakout when volume is following the breakout. If there's not enough volume, it won't break out. But in this case, it did. And it did so twice the day before. Okay, so anyways, what ended up happening was I tried trading it again, but I didn't draw the trend lines. I think I was listening to some algos, and then what ended up happening was I didn't even want to sell because I got it at such a bad price. And then I just held, and then I got out at like a really nice time. I'll show you what I mean. Can I show you from here? Yes or no? Let's see. Yeah, I could show you from here. I could. Do I want to? Do I think it'll work better? I saw this on the I was watching this on the 1 day scale, so I'll show you from 1 day perspective. Like, I have a lot to talk about, but I don't know if I'm going to cover everything in this video. Let's see, this is 18th. I had to go back to change perspectives. And here we go. Okay, so I said I had a really good exit, and basically all I did for the exit was price volume divergence. So price went up, volume went down, and as soon as I noticed that, I thought, okay, two things can happen. Stock price is going to go stagnant, it's going to go sideways, or it's going to drop. So I thought it's going to drop, and it did. So price went up, volume went up, but then the volume did not keep up with the price over here, and then it showed a doji, and then it just dropped. So I got out actually at right here. So it was a nice, really nice exit. But then in hindsight, I wish I followed this linear regression pattern, but it's not. I mean, it is linear regression, but it's like my own form, because it's a combination of drawing trend lines, linear regression, and a bullish breakout. So basically, when you're looking for a bullish breakout, you want to look for a stock that's downtrending, or at least downtrending to some degree. So you'll have downtrend, so falling support, falling resistance, and then you can see that here. So support, resistance falls, support is falling, and then it starts to kind of change over here. But like, one thing I want you guys to do, extend your trend lines. Like, very, 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 very important to extend your trend lines, because they don't always get disrespected. And like, what I mean by that is, like, yes, this trend line is kind of, it looks no longer relevant because now support and resistance are rising over here, and it looks like it's moving up, but it still respected it in the long term. So it was actually a good one to do. It turns into a leading indicator. So that's why it's really important. Another reason why this is really important is it shows you really good entry prices. So for example, I was in the trade over here. I decided to get in over here, which was stupid. I was probably looking for a breakout. But what I should have done is like use these trend lines that I drawn, and the way you do it is you join the tops, majority of the tops, and then you copy it, you paste it below, you hit, you try to hit majority of the bottoms, but you also, like for example this one, let me just, yeah, I'm already selecting it. So if I had moved it down and I wanted to select some of the bottoms, I would have probably hit this point. And what that does is highlights the best buying prices. It will be under this trend line, the bottom trend line. So these are great buying prices, and these are good selling prices. Even if it goes above, that's good. That's still good to sell over here. But obviously, the earlier you sell, if it's a they call it false breakout. So it goes to the top and it falls down. I mean, the best false breakout to sell on if you're going long in a downtrend is going to be the fastest one, the one that happens the soonest. So if you had done it over here, that would have been a really good one to do it on, because this one isn't as good, obviously. So anyways, falls over here, and now we can use the trend line that we've drawn before. This is how it becomes a leading indicator. And if you had bought anywhere over here or over here, you could have sold over here, or even stuck around for this breakout, which is awesome. That's it for that. Now I'm going to show you the good stuff, which is basically the same thing I'm talking about right now. Here we go. Why do I have this? What is this line? I don't know. Probably like a much bigger trend line or something. But anyways, so you can see here I've drawn a trend line that goes from here all the way down to here. Okay? So right now eyes is downtrending, and you can see it hitting top, bottom, support and resistance. It actually was a pennant, but it's been a pennant a few times and it's been falling. You can see here that like support wasn't really falling. It was rising, but it fell through, and it continually fell through. So pennant over here, it rose a bit, but then another. So, but overall, like, let's not complicate things. We don't have to. When you draw a trend line like this, hitting all the tops, you can copy it and then paste it. And then what you have is you can identify all these like discount prices. And then you can also identify, like I said, like earlier it hits the better. So like compare like 14 versus 16.53. That's amazing. This is a great trade. And then you can keep doing it. You can wait for those really good prices. So this was a pretty good price, 12.68, and then it didn't reach the top, false breakout. I mean, it didn't even try to break out. It just went what is it called, sideways. And then basically when you do this sort of thing, you reduce your risk. Which is really important for entry price, I find. I mean, you're not always going to be able to reduce your risk, but this is a good way to do it during a downtrend. And in stock, you have underlying bullish opinion. That's it for the video. I hope you enjoyed it. I still think this is kind of waiting for a breakout, so who knows? Who knows? But I still think these are probably really good prices. The main purpose of this was not to talk too much about eyes. It was more so to talk about the theory. And I am not a guy who falls in love with stocks and like sticks with them even when they drop to like whatever. Like I just follow what's hot on the day, and that works. So I'll stick with that. But anyways, yeah, the concepts here were really important. For me, it was like more trial and error and what I wanted to like learn from this trading experience. For me, it was like I want to buy near low of the day, and I want to sell near high of the day. I want to use this concept of trend lines and also linear regression and bullish breakouts and bearish breakouts and whatnot. Anything else I wanted to talk about? Yes. Okay. Quickly. You guys know about bands, like Bollinger Bands. So basically, when you have this kind of when you're buying at a discount, you got to be aware that this is going to be when it's at like either zero or negative position in the bands. It will fall through the bands, and then when you want to sell, it's 100% of the bands or above. So that's it. That's all I wanted to talk about. Peace out. Hope you enjoyed the video.